Hey everybody, my name is Kenneth. Welcome back to another stock trading walkthrough. I've made one stock trade over the last couple days, and I'm going to walk you through it right now. I've seen a lot of videos lately on TikTok with these really convoluted and confusing technical analysis charts and indicators and patterns, and usually the video goes along the lines of like, this is an invaluable secret trading method that only the best stock traders use, and if you want to learn more about it, you can pay me and I'll teach you. I don't want to oversimplify stock trading, but I really just use a handful of indicators half the time when a video pops up on YouTube or on TikTok telling me about a secret insider trading pattern that only the pros use. I've never even heard of it, and I've been trading stocks for the last 11 years, right? So I picked my method. The most important thing is you have a method that you like. Maybe you have a few methods that you really go back to, your tried and true stuff, your bread and butter things. Have an entry and exit strategy. Know when you're going to cut losses. Know when you're going to take profits. And you're basically good. So I want to walk you through Pxlw here. You can see over the last 20 days, this is a 20-day chart. This stock has been cruising. It was $2.12. And over the course of like a week or 2 weeks maybe, it shoots up to a high of $2.54. Disregard all these red lines on the screen. They're just lines that I set up in the past because this is a stock that I've traded before. What we're really looking at here is how there were no indicators for me to. So I buy stocks that are oversold, and it was never oversold, or I buy stocks that are breaking out to the upside. In other words, you can see these breakouts here, these little blue or turquoise or teal or whatever little arrows pointing to stronger volume, but you look down here at the volume and it's actually pretty weak. Doesn't really matter though, right? Because if you'd purchased it here at $2.24 and it shot up to $2.46, you'd be doing okay. By the way, I'm going to go off of 1,000 shares here just because it makes the numbers easier in my head. When I do these videos, I don't know what you're trading with. If you're trading with buying 100 shares or 1,000, 10,000, so I just keep it easy, 1,000. I missed all of these little rallies here. So breakout here, breakout here, breakout here. It pulls back, it breaks out again, but you can see it never gets oversold. So for someone like me who's looking to find stocks that are oversold, I'm missing all of these opportunities. Of course, the other option is to trade the breakouts, but that wasn't on my radar over the last week. I was waiting to catch the stock on a pullback. Also, you'll keep in mind that the earnings were out later in the week. I don't really like trading into earnings ahead of time because it's just a crapshoot. It's just a roll of dice. Could be good, could be bad, could be really good, but it missed expectations. There's 1,000 things that can go wrong with earnings or right with earnings. It's too much of a gamble. So if I had traded these breakouts, they would have been very quick because I'm aware earnings are coming out. I'd be in, I'd be out, I'd be taking profits. So I wait, and then the earnings come out. I don't even know what the earnings were. It might have been a good earnings report, but missed expectations. It might have been a really bad earnings report, and it just sold. You can see here. So the stock hits 254 day before earnings, and then boom, a severe drop. So going on the 1,000 share example, if you had purchased it right here into earnings, hoping, right, like rolling the dice, going, oh, I hope it goes up. You'd be in at 254. It drops all the way to basically $2, which means if you had 1,000 shares, you would have a $540 loss. Or, and I don't know if you can do this, I'm going to show you right now. You click anywhere on the chart, hit add drawing, and go to this line, which will say trend line. You know what? You can see it right at the top. You can see a little box, but it cuts off. So what I'm going to do is I'm going to come over here and I'm going to click in this area. I'm going to drag this chart down a little bit. I'm going to do it again. Add drawing, trend line, and we're going to go down here, and you can see that it is down 20.96%. So you're sitting on a 20% loss if you had gotten into the stock ahead of time, chasing, YOLOing, FOMOing in to the earnings, hoping that you could, capitalize on a bigger rally if the earnings were good. But you get crushed, you're down. It even breaks this 200-day moving average on the way down. That's bad. This is a falling knife. So even though it says that it's oversold, I'm not stepping into this one because after bad earnings or after the earnings come out, this thing could go lower. This doesn't really mean a whole lot to me. What I'm waiting for is consolidation. I want a couple things to happen. One, I want these Bollinger Bands. That's this red line, this bluish line in the middle, and the purple. I want the Bollinger Bands to narrow. This shows me that the volatility is calming down. And as the bands squeeze more and more together, it indicates that there could be a breakout. It doesn't say which way, right? It could be a breakout to the downside, it could go lower. But I want these bands to start consolidating. I want the stock to start cooling off and just trading in a very small range. As you can see, it's starting to do right here. Now, I bought this stock on the 16th, which was here, and I paid $2.10, which means I bought it somewhere around here. Maybe I bought it when it crossed over this 20-day moving average in the middle. Maybe that's when. I don't really remember. I might have just bought it to buy it. So I'm in at 210. The first thing I'm going to do is I'm going to plot out where I'm going to take my loss if this stock breaks out to the downside. So I'm going to right-click, add drawing, trend line. I cut losses at 7%. Almost exclusively, unless I make a snap decision in the moment. So 7%, we can see that it would put me at around $1.95. I don't use stop losses because I'm an active trader and I'm sitting at my screen all day. I'll just right-click on the screen. I'll hit create an alert, and I'll say if this stock drops below $1.96. alert me. Now I can go to the gym, I can go to the grocery store. As long as I have my phone with me, my alert triggers if the stock breaks out to the downside and starts to go down. I can cut losses and I can walk away from this trade. So I know going into this trade, right when I purchase it, I plan on losing 7% if it works against me. I buy 1,000 shares at $2.10. Which means if it goes to $1.95, I lose $150. That's my loss. I know it before I make the trade or right when I make the trade. Now I'm going to delete this because I've already made the trade. I sold out this morning. So I'm in at 210. It's consolidating. It's trading sideways. It could trade sideways for a day. It could trade sideways for a week or a month. Frankly, I don't care. The only time I would consider cutting my losses or taking my profit or breaking even is if I was running low on funds and I saw another stock that I really wanted to trade. So when I say I swing trade for days or weeks or even months, I mean it. Like I could sit in this trade for a month or two or three. Unless I needed the money for something else, then at which point I would reevaluate, I'd cut losses or take a small profit or break even, whatever, just to get the money back. And you know, well, I shouldn't have deleted it, but I had the alert here at the bottom. So I'm free to go and do whatever I want. And as far as a profit goes, you know, you can set alerts as well up here. You can say, alert me when it crosses above this price, alert me when it crosses above that price, whatever your target is, however much money you want to make or percentage that you want to make. Again, I didn't do that because I'm a full-time stock trader, so I literally, this is what I do. I'm just sitting at the screen all day watching these things. This morning, so today is August 18th. It's a Thursday, if you care. I sold this stock. I sold it at $2. Let me pull it up on my phone so I can give you the full price that I sold it at. I sold it at $2.44 at 9:40 this morning. So market's open at 9:30. You can see right here that it pops all the way up to $2.49 or thereabouts. I sold it at $2.44. I bought it at $2.10. So we'll go add drawing, trend line, and we'll come right up to $2.44. I made about 16% in just 1, 2, 3 days. 2 days? 3 days? I bought it on the 16th. Where's the 16th? 16th, 17th, 18th. So in 3 days, really 2 because I sold it right first thing this morning. I'm up 16% on my trade. I'm out. That's a pretty good trade. There's no convoluted, weird trading algorithm tech analysis that no one's ever heard of that I'm trying to sell you, of course. I don't mean to oversimplify it, but it really is relatively simple for me. I buy stocks that are either oversold or breaking out on very strong volume. I know my entry, I know my exit, I know where I'm going to cut losses, I have a general profit in mind. Another thing you can do is go to the highs and the lows. So let's just go back here, and we're going to right click, and I'm going to go to Fibonacci retracements, and I'm going to put it at this low because that was the most recent low before this morning. And now I can have even more ideas on where I think this stock could go profit-wise. Let me get rid of these so I can clear up the screen a little. So now I can say, all right, we're holding support on this bottom line right here, the 0%, $1.99. We're holding support down here. If this stock breaks out and moves, where could it potentially go? It could go to 211, 219, 225, 231, and we're dreaming here about 250. Those are all my potential price targets. Now I can calculate out, before I get into the trade, if I'm going to buy 1,000 or 10,000 shares, and I think it could go to either one of these prices, I can calculate out, right? I know my loss is going to be at $1.95. I know I'm buying it at $2.10 because that's where I purchased it. This could be a profit. That could be a profit. Now it gives you an idea. And if you're sitting full time at your screen, you can pay attention. Look at the volume today. Look at the volume over the last few days. It's been so weak. This volume is huge, which tells me, and we've got some key indicators here, right? We're breaking out on the upside. We're crossing over this is a 50-day moving average. This is a 200-day moving average. We're breaking all of these moving averages. We're crossing over all of them, which is very bullish. So if I'm watching this in real time and I'm seeing, wow, we crossed the 20, the 50, we broke out on resistance, the top line here. We have very strong volume. It's moving really, really strong right at the open. Look at this. Also, right at the open, it crosses the 200-day moving average. Now I'm thinking, all right, maybe we could get over 231. Maybe we could get to 250. And sure enough, we actually do, which is funny because just a few minutes ago, right, I said we're dreaming here. But it gives you an idea. So before you enter the trade, you do your little Fibonacci retracements. It gives you an idea of potential price targets. Then you can calculate out, I'm in at 210. If it gets to 225, how much have I made? If it gets to 231, how much will I have made? And it gives you an idea of what you can make and what you're happy with as a trader. Drink break. That's basically it. This is how I trade. Do I care that it went higher? No. I made 16% in 3 days. I'm really happy with that trade. Nothing complex, nothing confusing. There's no weird analysis that no one's ever heard of. Anyway, I'm repeating myself. If you thought this video was helpful and you liked it, hit the bell, hit the notification, please subscribe. Thanks for watching, and have a good day.